Hello, everybody. My name is Mitch Schumer. I'm an associate wealth advisor here with Beacon Pointe, and on behalf of our team, just want to say we're happy to welcome you to this webinar, Maximizing Your 401k and Other Workplace Retirement Plans. Quick fact for everybody, I happened to just read this recently on an investment company report. Did you know that Americans hold almost $9 trillion in 401k plans? $9 trillion. That figure is comparable to the combined market cap of companies like Apple, Nvidia, and Microsoft. Reasons like this or numbers like this are why we believe managing your 401k effectively is crucial to ensuring a secure retirement. As you approach this significant milestone, you may find yourself wondering how you can enhance your retirement savings. And today we will help you understand three critical areas to help you strengthen your 401k as well as other workplace retirement savings, along with some actionable steps to help you reach these goals and retire with confidence. As a bonus, you're going to receive a gift after the session that highlights some items of interest that deserve a spot on your watch list. Before we dive in, though, we do want to hear from you guys attending. So if you could, please use that Q&A box to let us know how many years you've been contributing to a 401k, 403b, or other workplace retirement account. I do want to make sure that I mention that only we as panelists can see your answers, and these are entirely confidential from the others attending. And while you go ahead and reply to that Q&A, let me go ahead and introduce the speakers for today, starting off with Tom Selbo. Hi, Tom.
Hey, Mitch. Great to be here, and nice background.
Appreciate that. Yours as well. Tom is a partner and senior wealth advisor at Beacon Pointe with over a decade of experience in wealth management. He's passionate about helping his clients manage their investments and plan for their future. When not in the office, Tom enjoys spending quality time with his wife and his three kids, as well as activities like fishing, golfing, and even playing the guitar. I'd also like to introduce our other speaker today, Leah Swanson. Hi, Leah.
Hi, Mitch.
Leah is a certified financial planner who's been with Beacon Pointe now for 8 years. She is passionate about building lasting relationships with her clients and meeting them where they are at in their financial journey. She specializes in helping these clients transition into retirement, focusing on retirement income distribution strategies, as well as estate planning needs. Outside of work, Leah likes to spend time outdoors, enjoying activities like running and golfing. And I heard from Leah she's even working on improving her gardening skills this season. All righty. Well, just kind of looking at some of the responses we got from some of you in the chat, it looks like some of you have been contributing 12 years. That 25 to 30 range seems popular. Man, I even see one in here for 38 years. That is absolutely incredible. I just want to say thank you all for sharing that with us. And with that, want to go over a couple of our agenda items or what we have on the docket for today. Over the next 20 minutes or so, we're going to cover three important steps for you, as mentioned before. One of those being how to maximize the value of your contributions. The second being managing your investments through market ups and downs. And the third being the benefits of professional management on your 401k. We do recognize that some of you attending right now might no longer be working, and you may have friends or family who are, though, so this is definitely still valuable information for them. With that, I'll go ahead and turn it over to Tom and Leah.
Thanks, Mitch. So what do you think the number one fear is for people as they approach retirement? And maybe go ahead and type your answer in the Q&A box. I would say some of the most common fears that we hear are, will I have enough money to retire? Or maybe, will I run out of money during retirement? So if you've had similar thoughts as it relates to your retirement savings, just know you are not alone. There's actually a recent BlackRock survey that showed 60% of individuals fear that they will outlive their retirement savings. So our goal is when you leave this webinar, you will have clear strategies to confidently optimize your workplace retirement plan. And utilizing your workplace retirement, and this might be your 401k or a 403b account, is really a key step in building retirement savings. So when you're determining a strategy to maximize the value of your contributions, there are a few important things to consider. So the first thing I would mention is contribution limits. Many of you know that each year the IRS sets limits on how much you can contribute to the 401k. And so for 2025, this amount is $23,500. For those of you who are age 50 or older, you can contribute a catch-up limit of $7,500. And then new this year, for individuals who are age 60 to 63, you're eligible for an extra catch-up contribution of $3,750. So type a Y in the Q&A if you are currently on track to max out your 401k plan.
One thing to keep in mind, Leah, is it's important to monitor when you reach that limit throughout the year, because often if you reach the limit too early in the year, you could miss out on potential employer matches. So just monitor that year to year, making sure you're stretching out those contributions from January 1 to December 31.
Yeah, that's a great point, especially for those who might receive a bonus and part of that might go into the 401k plan. So yeah, that's a great point to call out, Tom. Another consideration that I want to mention too is your pre-tax versus Roth contributions. So pre-tax dollars will help to lower your taxable income for the year, while your Roth contributions are made after tax, which means you pay the tax on the money today, but your withdrawals are tax-free in retirement. So does anybody know the year the Roth 401k became available? And type your guess in the poll that should pop up on your screen. A common question that we often hear is, should I be contributing to the Roth 401k? As you might guess, the answer is it depends. So every situation is a little bit different. So I want to share just a hypothetical example of how we would address this question with a client. So for this individual, we reviewed her current marginal tax bracket and then compared her current tax bracket to her expected tax bracket in retirement. And so in her case, she was expected to stay in a pretty similar tax bracket. The next item that we wanted to look at was her balance of accumulated dollars in pre-tax versus what she had in Roth dollars. And the reason we do this is having both pre-tax and Roth funds in retirement can really provide you with much more flexibility when you do begin taking distributions. So to give you an example, maybe you consider drawing more from your tax deferred accounts or those pre-tax dollars when tax rates are lower, and maybe more from the tax-free accounts or the Roth funds when tax rates are higher. And ultimately, this helps just to maintain a little bit more of a consistent overall tax bracket.
Yeah, and just a misconception to keep in mind is that with the Roth 401k, there's actually no income limit to do that. With Roth IRAs, many may be familiar that if you earn too much money, you can't contribute to those Roth IRAs, but in a Roth 401k, no income limit. So a great planning tool there. Let me just look in, see if we have the poll results on when that.
So Tom, I
Yeah.
shared the wrong poll, so that's totally on me. So we answered
move
when
on.
did you last rebalance your 401k? So I'll reveal those poll results later in the webinar.
Sounds great. Thanks, Tamara. Good. So another thing for everyone to keep in mind is besides the traditional and the Roth savings options, there's often what are called after-tax savings options inside the 401ks. So depending on your plan, you may have the option to contribute additional dollars beyond the IRS contribution limits. And this is done through an after-tax savings option, or sometimes it's also referred to as the mega backdoor Roth. If your plan allows this option, your contributions can later be rolled into a Roth IRA, and then the earnings get rolled into the traditional IRA. So it's a great tool to get a lot of dollars saved for retirement if you're in that scenario. And as your financial situation and your retirement goals evolve, it's important to review the contribution strategy regularly, because you may find you need to increase or decrease your contribution rate to take advantage of changing employer matches. And just be mindful of these kind of things can help you make the most of your plan. The other thing we want to stay mindful of is just the long-term goals. when markets are experiencing increased volatility, a lot like we've experienced this last month. So now that we've talked about maximizing the value of the contributions, let's just move right into the next agenda item of how to manage those investments and contributions through different market up and down cycles. So we all know managing our investments is essential. Whether we're 15 years from retirement, you're already retired, or somewhere in between, a key part of staying on track is to maintain proper diversification, which really means investing at a risk level that feels right for you and avoiding the temptation to time the market by jumping in or out just with the whims of what's going on in the world. So another question for everyone out there, when was the last time you rebalanced your 401k or reviewed the investment options? So this is what we had up before, and it's like, okay, most within the last 6 months, so good for you. And some of us never, and that's actually quite common. And what normally happens is most people will choose an allocation in the 401k when they first start their job, and then they never revisit it. And in strong market years like 2023 and 2024, where the S&P was up over 20% year over year, it might not seem like a priority. But in a challenging year back in 2022, the S&P was down over 20%, and the lack of attention there can cause unnecessary stress.
So I have a question I want to ask Tom. If you found $100 on the street, what would you buy?
Golf balls.
Perfect. Yes. And so, well, as advisors, the right answer might be that we should invest the money, but you might buy golf balls. I might buy some new gardening tools. But for those of you who are like me, you'd probably feel happy about finding $100 and then very quickly forget about it. So now on the other side of that, think of how you would feel if you accidentally lost $100 due to a hole in your pocket. If you're like most people, usually the feelings of loss would be far greater than the happiness you felt picking up that same $100 bill. And so this disproportionate reaction highlights how emotional investing can be and why we feel that having a solid strategy is just so important. I think another common misconception that sometimes we hear is that as you approach retirement or as you're in retirement, all of your investments should be conservative. However, we often find that retirement might last for 20, 30, even 40 years. And so we need your money to grow to keep up with inflation and really ensure that it lasts throughout your retirement. And so I think this brings us to what we like to call the bucketing strategy. Tom, do you want to kind of explain how the bucketing strategy works?
Yeah, let's jump into it. So I'll make this one pretty simple for the purpose of this presentation, but let's just start by saying, okay, we have our first bucket, we'll call it a bucket 1, is our income bucket. And this is for dollars we're going to need within the first 2 to 5 years of retirement. So think about your mortgage payment, utilities, food, groceries, vacations, hobbies, just normal year-to-year living expenses. And we allocate this portion in this bucket very conservatively, and we draw from it monthly or as needed in those first years. So by reducing the investment risk on these dollars, we can help you avoid significant market volatility in the short term. So what we do then is we couple that income bucket with bucket number 2, which I would call your growth bucket. And this is for dollars we don't plan to touch for 5 years and beyond into the future. Because we have that 5-year buffer and we know we're not going to use it, it allows us to take more risk. And, within each client's comfort level, of course, but by taking that bigger risk, we know we're going to have volatility, but we should achieve greater long-term growth. So the dynamic of these is as your income bucket is drawn down, we assess the best time to replenish those dollars using growth from the growth bucket. And this method helps us balance the immediate needs for cash as well as future growth and keeping up with inflation. So it gives us the best of both worlds, providing stability in the short term and flexibility for the long term. Now, a common question we often get is, why don't we just take distributions directly from the 401k? And the key difference between that approach and using a bucketing strategy like this is how the funds are withdrawn. So with a 401k, distributions are typically taken on a pro rata basis. So for example, if you're invested 80% in stocks, 20% in bonds, and you want to take $10,000 out, it will automatically sell 8,000 from stocks and 2,000 from bonds. So this means that we can't really choose to withdraw only from the bond portion if stocks are down significantly or in an especially volatile period. However, with the bucketing strategy, no matter what's happening in the market, we have a tailored strategy and plan designed to meet your unique goals and objectives. This is a strategy we often start to implement for those who are a few years out from retirement, even within their 401k plan. I would just say, if you get within 5 years of that date, it's good to start building out this bucket strategy before that retirement date. So let's move to the next section, Leah. What are some of the benefits of getting some professional help with the 401k management?
Yeah, well, I just am thinking back to what Mitch had mentioned at the beginning of the webinar, with the statistic that Americans hold almost $9 trillion in 401k plans. And I think for many of our clients, their 401k represents just a very large part of their overall retirement assets. So I think maybe I'll just share another hypothetical example of a client who was kind of starting to consider retirement a bit more seriously. He had felt that the target date funds had been okay in the past, but really wanted to see if he had the option to have it professionally managed. In his specific case, he was concerned about market volatility as he was nearing retirement. And maybe type a Y in the Q&A if you have similar concerns with the recent volatility that we've been seeing. And regardless, market volatility is a common concern for those who are even 10 to 15 years from retirement. And so, they're often looking for guidance to help protect their assets, but also make the most of their investment accounts. So for a client like the one in my hypothetical example, we would help them transition to a professionally managed account with much more robust investment options to really help them feel confident about their retirement plan. And so, sometimes another question that maybe you're thinking yourself is, why would you want professional management of your 401k? Tom, do you want to take us through some of the key points of why somebody might consider professional management?
Sure. So a number of reasons to consider that, but I'll just talk about a few of the most compelling. So 4 that we came up with would be experience, personalization, peace of mind, and performance. Which of these 4 for everyone out there would benefit you the most? Go ahead and answer the poll here. Perfect. And we'll review the results in a little bit. Let me just jump into each of these though. So let's start with experience. And this one may be obvious, but working with a team of professional managers with knowledge and experience to make informed investment decisions is always crucial. So investors may be prone to make emotional decision making during volatile times, and professional managers can help you avoid making impulsive decisions to keep us on track to meet the long-term goals. Second benefit would be personalization. And I would just ask this hypothetically. I mean, how many of you out there have used or are currently just using what are called target date funds in your retirement account? And just like the client example we shared earlier, many rely on target date funds as a set it and forget it type of investment. However, target date funds typically underperform professional management in the long term. And the reason for that is when target date funds create their asset allocation, they will use a fund from the same company, for example, Vanguard. And Vanguard, just like most fund companies, will have funds that are great performers some years, some that are not so great, and some that are just in the middle. Now, you contrast that with a professional management firm. We can shop and use funds from any family out there to make sure we're using the top choices for our clients.
And Tom, maybe I would just add a point on target date funds. They're not all made equally, and they will only begin to reduce the portfolio risk as you get closer to that planned retirement date of the fund. And so while we're helping to manage the 401k assets, we will know your goals and your objectives, and we can really help to create the proper strategies you'll want in place as you do get closer to retirement.
Yeah, and just to add on that real quickly, I mean, specifically for everyone out there who is, let's say you're within 10 years of retiring. I mean, especially for you, if you're in those target date funds, what's happening is every year that fund is automatically getting safer at a pretty big clip. So it's selling bonds, buying stocks. And when we have volatile markets like now, sometimes you absolutely don't want to sell your stocks. You want to ride through those periods. So adding a layer of professional management can help us just avoid that automatic mistake that could be happening. The third potential advantage for professional management of the 401k is just giving you peace of mind. Knowing that your investments are being monitored and handled by a professional team can alleviate stress and free up your time just to focus on other priorities in your life. And finally, the last benefit we tend to see is performance. And where this really comes into play is there can be additional investment strategies outside of your typical 401k allocations that you see that we can help implement to drive better outcomes. And a recent Vanguard study showed that professional management of these accounts can generate more in returns of each year, net of any additional fees, versus trying to do it on your own. Professional management can simply just lead to more consistent outcomes.
So Tom, if we think back to the story of finding versus losing $100 bill, I think investing isn't just about the numbers. It can really evoke emotions as well. And I think that's where professional managers can come in, where we're bringing knowledge, discipline, and just a long-term perspective to really help navigate those market ups and downs that we're bound to see at some point. And so we can help integrate your 401k or 403b into your overall investment plan and offer these benefits like enhanced diversification, periodic rebalancing based on our market outlook, and even access to additional investment options depending on your employer's plan. So while this is not available for every 401k, we can provide this service for many clients. And getting started is simple. It really just begins with a conversation, determine if this is the right option for you. So at the beginning of the webinar, we promised to provide you 3 critical areas to help strengthen your retirement savings to retire with confidence. So just to recap, we have discussed how to maximize the value of your contributions, managing your investments through market ups and downs, and the benefits of professional management of your 401k. We also mentioned that there would be a gift for joining us today. And our mission here at Beacon Pointe is to help you protect and grow your hard-earned wealth while achieving peace of mind as you work towards your life and legacy goals. So with that in mind, we're excited to offer you a gift of 3 notable stocks to watch, which includes a description and some key characteristics of each stock. Please keep in mind this document is intended for general informational purposes only and should not be construed as investment advice. But just watch for an email in the next 24 hours or so that will include this offering. And as a bonus offer, if you want to go a step further and apply the items that we discussed to your personal situation, we do have limited spots available over the next 2 weeks for a complimentary all-wealth retirement readiness consultation. And by the end of this consultation, our goal is that you will have some tailored strategies designed around your specific goals and objectives, guidance for effectively reaching your retirement savings goals, And finally, peace of mind that your retirement assets will last throughout your lifetime. So if this sounds like something you or even a friend or colleague would find valuable, simply scan the QR code on the screen to book your session. And as mentioned, we do have limited spots available over the next 2 weeks for this complimentary consultation, so don't wait. Thanks so much for joining us today. We wish you all the best in your journey toward a confident and fulfilling retirement. Be well, everyone.
Thanks, everyone.